Stocks swing between gains and losses, keeping investors on the edge. IT and metals gain while utilities and autos dip.
The Defence Acquisition Committee approves procurement of an additional 4276 crore rupees worth of missile systems for the Army and the Navy, providing a fillip to vendors like Bharat Dynamics.
Restocking ahead of the Chinese New Year gives a further fillip to metals, even as a V-shaped recovery buoys sentiment. The optimism boosts metal stocks.
The Auto Expo returns after 3 years with 75 new models set to be unveiled by 48 participating OEMs. Maruti and Tata Motors are two of the key players in focus.
Hello and welcome to Halftime Report. I'm Sonal Bhutra and with me are Ekta Batra and Mangla Malu. Guys, good afternoon. Well, it's been a volatile session so far, right? We have been swinging between losses and gains. Yes, the Nifty is off 100 points from the lows, but again, from the highs, it has fallen around 40-odd points. We have the IT space, which has made a comeback. So those stocks are doing well today, but the consumption and FMCG pack, so there is some declines there. And a lot of stock-specific news as well. We have the Bank Nifty, which is outperforming. But what happens next remains to be seen because it has continued to be a volatile session today.
It has been. Hi, good afternoon. It has been extremely volatile. In fact, over the last 3 trading sessions, the Nifty swung between red, extreme green, and then extreme red yesterday as well. And today, is just a reflection of what the last 3 days were. We opened in the red, then moved on to the green, then saw a bit of a dip from the highs, and now we are making a recovery from the lows. The only two things that stand out in today's trading session. The first one is that the recovery is being led by the Nifty Bank, which has been underperforming for the last 4 trading sessions. And as we speak, the HDFC Bank as well as HDFC Limited, the HDFC twins should come up for you. We're seeing the Nifty Bank move to the high point of trade, and that's primarily courtesy HDFC Bank. HDFC Bank, the intraday chart comes up for you. HDFC Limited is doing well and HDFC Bank. And if these two stocks can continue to do well, that would be a positive. And the second part is that the IT stocks are doing well. So on Monday, when the Nifty Bank was underperforming, IT stocks were doing well and doing the heavy lifting. Today, both the Nifty Bank and the IT stocks have come to the party. IT stocks, of course, just about 1% higher on the index. But let's see where we go from here, because if we do go higher, there is a fair amount of fuel in terms of short covering to take the markets higher. Hi, Ekta.
Hi, Manglam. Hi, Sonal. Yes, absolutely. But stock-specific action continues. And I just want to point out Marksons. That one just came up with a piece of news where they are going to be issuing convertible warrants worth around 372-odd crores to the promoter as well as OrbiMed Asia. They will be issuing these convertible warrants on a preferential basis, which would be at a premium to the current market price of around 62.4. It works out to be around 74 rupees is the price that they will be issuing these convertible warrants. So positive news coming in for Marksons. We'll get more details on this. As of now, the stock is holding up with a gain of around 0.16%. But the other one, which is in focus, in fact, and is seeing quite a bit of downside, is Bharti Airtel. It's the top loser on the Nifty, and it is the first stock on our radar this afternoon. The stock is losing post a downgrade, which has come in from the brokerage JP Morgan. Nimesh is here with the details on this. Nimesh.
That's right, and that's the reason why Bharti is the biggest loser today, as JP Morgan has today downgraded the stock to underweight from overweight, and they've sharply cut the target price to 710 versus 860 earlier. Now, 3 specific reasons why why JP Morgan has downgraded Bharti Airtel today. 1, higher than expected capex. 2, delayed price repair, and 3, lack of 5G monetization. In fact, JP Morgan believes that Jio's focus on high-end consumers would mean that there is a higher capex for Bharti Airtel to defend the market share, and competitive pricing in 5G would delay the free cash flow and return on invested capital. Now, at the current market price, JP Morgan believes that the stock is baking in a modest FY24 estimated capex, 10% tariff hike, and a continued ROIC expansion. All 3 looks difficult in the current environment, and hence a big downgrade on Bharti Airtel to underweight from overweight, and they've sharply cut the target price now to 710.
All right, Nimesh, thanks a lot for that. So that's about the the standout brokerage report of the day, which means that Bharti Airtel is among the top losers on the Nifty at the low point right now. Rima joins in to tell us what JP Morgan makes of the entire telecom sector as a whole for 2023. Rima.
Thanks so much for that. You know, the elephant in the room when it comes to the telecom sector and its performance is going to be whether we are going to see a tariff hike in this year. And according to JP Morgan, there is no tariff hike coming from the telecom operators this year. It is pre-election, inflation is hurting consumers, and they're saying it will be difficult for telecom operators to do another tariff hike because the previous tariff hike of 20% had resulted in heightened churn. Even last year, there was a lot of hope that telecom operators will do a tariff hike, but that got pushed back as Bharti Airtel and Reliance Jio decided to focus on their 5G rollout in order to get the first mover advantage. And even this year, in calendar year 2023, both Bharti and Reliance Jio are going to be focused on rolling out 5G services and expanding their coverage. Now, when it comes to 5G pricing, right? 5G can command premium pricing over 4G, but according to JP Morgan, that's not going to happen anytime soon. Right now, at least, both the telcos have offered 5G on the existing 4G plan pack, and they say there is no premium pricing for 5G, at least till there is a critical mass adoption. And if there is no tariff hike which comes through in the next 6 months, it could come in as a big disappointment and Bharti Airtel stock can derail. In the event that we do see a tariff hike, according to JP Morgan, the quantum remains uncertain. Back to you.
All right, okay, Rima. So that is making sense of what's happening in the telecom sector as well. With that, we'll move on and focus on the steel sector now. These companies are in focus after JP Morgan in its latest note believes that more price hikes are on the way. Nigel D'Souza is joining us with more details on this one. Nigel?
Well, that's right. JP Morgan believes there are more price hikes that are likely to come about. They highlight the fact that Chinese prices, well, that had moved to closer to around $500 per ton. That's bounced back in style to around $620 per ton. And some deals are also happening at around $635 per ton. They believe that demand is likely to bounce back post the new year. Remember the price increases. Normally, it's a seasonally strong period, that November, December odd period. But this time around, it's got a little bit delayed. But they believe the best is yet to come in terms of pricing. They highlight that, yes, domestic prices are up by close to around 1,500 rupees per ton. But now the landed imported steel is coming in at around 60,000 rupees per ton, while the domestic pricing is at around 56,000 rupees per ton. So they see a good case that pricing can go up. Steel prices can move up by around 3,000 rupees per ton in the next 2 to around 3 months odd. They also take on board that, yes, coking coal costs are higher, which could limit the margin expansion from here on. But they're expecting good earnings recovery for the steel stocks. So that could explain why the stocks do well.
Okay, all right, Nigel. Thanks very much for that. So that's on the entire metal space. Some news coming in on Atul Auto, so just watch out for that. It has unveiled its electric three-wheelers. And this is at the Auto Expo, which is taking place. But let's move on to the defense space. Bharat Dynamics is up in trade. The company is a beneficiary of the Defense Acquisition Council's nod for acquisition proposals worth over 4,200 odd crores. Vaishta is here with the details on this story. Vaishta.
Hi, Ekta. Thanks for that. Well, mostly all defense stocks are in focus today, and this is because you rightly mentioned that the Defense Acquisition Council has approved the acceptance of necessity, and this is for 3 capital acquisition proposals summing to 4,300 crores, and the 3 proposals include 2 of the Indian Army and 1 is from the Indian Navy. Now, this includes the procurement of Helena anti-tank guided missiles, launchers, and associated support equipment, which will be integrated to the Advanced Light Helicopter. Also, there is a procurement of IR homing missile systems, which is under the design and development by the Defense Research and Development Organization. Now, these new developments are expected to be beneficial for aerospace and defense manufacturing companies such as Bharat Dynamics. Back to you.
All right, Vaishla, thanks a lot for that. The other stock which is buzzing around in today's trading session, in fact, since yesterday itself has been Max Financial after Axis Bank revised its deal to acquire 7% additional stake in the company. Yash joins in with the implications and perhaps what the fair market value could be. Yash.
Well, that's correct, Mangalam. So, of course, Max Financials is a stock which is building upon gains which it took yesterday. And that is primarily because of what Axis Bank informed exchanges that they will be acquiring the balance 7% stake in Max Life Insurance at fair market value. And this fair market value will be derived through discounted cash flow mechanism. Now, we've just worked out 2 scenarios in terms of what this fair market value could be. And just look at these numbers. So, a total equity base of Max Life comes to about 192 crore shares. 7% acquisition, that gives you the number of about 13.4 crore shares which are to be acquired by Axis Bank. Now, in the first scenario, we'll go by the last assessed valuation, which was 166 rupees per share. The difference that Axis Bank will have to pay on the higher side would be about 134 rupees a share, and that means that they'll have to pay an additional amount of 1800 crore rupees extra over the last valuation, which was 35 rupees a share, which was done to acquire the first 13%. In the second scenario, now here we look at the last transaction which was executed, for which the regulator gave its approval. That was Max Financial buying about 5% stake in Max Life Insurance at 85 rupees a share. The difference here between 85 and 32 comes to about 50 rupees a share, and according to that, Axis Bank will have to pay 700 crore additional to acquire the balance 7% stake in Max Life Insurance. Now, of course, these are just assumptions and assessments on fair market value, as Axis Bank has said that the last price on the valuation will be derived through the discounted cash flow mechanism. But whatever that final price is, it will be beneficial for Max Life Insurance, as it will get a higher price for its 7% stake in Max Life Insurance, and that explains the move on the stock today as well.
Okay, all right, Yash, thank you so much for joining us. So that's Max Financials in focus, up 4% in trade today. For now, we'll do one thing, we'll slip into a short break. There are more stock-specific moves that we are seeing today. We'll get you more on that and the markets as well. Stay tuned. Welcome back. Well, it continues to be a volatile session. Nifty is in the red right now, down around 11 odd points. So we'll keep tracking markets for you, of course. But stock specific action, as I said, on the back of news updates as well. And one of the stocks that we are focusing on today is Adani Wilmar. It is higher in trade on the back of Q3 business update. Mangalam, how did it look?
Well, the Q3 business update for the company looked better, this time around, primarily because it was also the festive season. So the overall revenue for the company grew in high single digits. The internals, that's what's positive out here. Mainstay of the company is edible oil. The volumes out there grew in high single digit with low single digit value growth. Why is it that the value growth was lower? Because we all know that oil prices, after rallying to dizzying levels, have actually cooled off from the high. So the companies have had to pass on the price cuts to the consumers as well. But the margin driver of the company, which is the food and FMCG business, that grew in mid-40s in terms of revenue, and volumes grew in high 20s. And this was on account of, them selling more wheat as well as some rice as they increase their distribution too. Industry essentials, where they, supply oleochemicals, etc., to a lot of the consumer companies, have seen revenue growth in high teens as well. The company said that growth for them has been broad-based across both urban and rural. However, urban has had higher saliency than rural markets itself. In oil business itself, where they say that the growth has been in high single digit, B2C or, direct to consumer sort of oils have grown in high double digits. The reason why the growth has been limited out there is because institutional demand for edible oil this time around was weak. So all these things point to better performance this quarter, and that's why the stock is holding up in the green after having corrected a bit from the highs as well.
Okay, all right, Mangalam, thanks very much for that. Well, let's move on to another important story. We learned from sources that the government is in fact reviewing the export restrictions imposed on rice as domestic prices are stabilizing. Earlier today, we did speak to Ayush Gupta, who's the business head, domestic business KRBL, on the trends in the market and the outlook for the company. Listen in to what he had to say.
Basmati rice prices, have consequently increased significantly, in the last couple of months. As we speak, MAC November 22, our volume market shares have already risen to a level of 35.4%. And we're hoping these, the market share will inch towards the 40% mark by the end of this financial year. So procurement, as far as KRBL is concerned, our procurement levels have moved up almost by 30-35% compared to last year. Pricing on the procurement front has gone up by almost 15 to 20%.
All right, that's the commentary coming in from KRBL. Well, let's talk about the mutual fund industry as well now, because there is an important update that has come in. SEBI has written to the Association of Mutual Fund Industry, and this is with respect to circular on development of passive funds. Now, remember, that was issued back in May 2022, and now there is an update on that. First, the news, and then what it means for funds as well. Now, mutual funds with existing actively managed open-ended ELSS schemes can now launch passive ELSS funds as well. So that's an important update. This can happen only, that is the launch of passive ELSS open-ended funds can happen only if the mutual funds, they stop accepting subscriptions to existing open-ended ELSS, that is the active funds as well. Additionally, they also say that these two schemes have to be merged after 3 years of closing active ELSS scheme subscription. Now, this has come to the fore. That is because SEBI or AMFI received a lot of industry representation as well. And earlier, SEBI allowed mutual funds to launch passive ELSS funds. That was back in May. But there were funds which already had an active fund. So according to SEBI rules, in the similar scheme, you cannot have, in a similar segment, you can't have two different schemes, so to say. But now the SEBI has actually paved way for launching another scheme in the same segment, given that they do not have any flows coming in for the other scheme. So that is a big move that we are seeing here. AMCs with existing open-ended ELSS schemes could not issue new schemes earlier, but now they can. And this is on the back of the feedback they had received from different stakeholders. So now the focus is more on passive funds or passive ELSS funds, so to say. And that is an important update. Of course, it is only for open-ended schemes. The closed-ended schemes remain as is. But for the passive investors, this is an important update that has come in.
Okay, all right, Sonal, thanks very much for that. So important update coming in there. But just want to focus on a couple of stocks. Yes, it is definitely weak for the mid-caps as well. It's down around 0.3%. But just watch out for a couple of these agri-related stocks. KCP Sugars, which is up 7.5%. Jayashree Tea, which is up around 6.8%. Jain Irrigation is up around 6.5%. So that possibly is one particular theme which seems to be playing out in today's trade. Overall, Bank Nifty holding up with a gain of around 0.6% at this point. Time for a break now, but full tilt on the markets. Ashish Kyal of Wave Strategy Advisors will join in with his trading strategies.
Welcome back. You're watching us here on Halftime Report. Absolutely flat for the Nifty. It's been that kind of day. It's been extremely volatile. Opened with a cut, then rallied, and then now we're off the highs and both off the lows as well. The Nifty, is at an interesting point where we are right now. It's off the highs of today's trading session, which was 17,976. So levels closer to 18,000 are finding some sort of supply. But where we are right now is just around that 100-day moving average of 17,906. And we're off the December lows as well. 17,774 is an important mark we have to watch out for. And the fact that we've sold off from the highs and we're still off the lows gives strength both to bulls as well as bears to go ahead and write options, especially when it is weekly options expiry tomorrow. So the 17,800 put, that comes up for you. That's seen a fair amount of writing, almost 40 lakh shares being written for a premium of 30 rupees. So that's telling you 17,770, which again coincides with the December low, would be an important support to watch out for. On the way up, however, our inability to cross past that 18,000 mark has given a lot of these 17,900 and 18,000 call writers a fair amount of ammunition. So 17,900 call has added 40 lakh shares in open interest. 18,000 call has added about 22 lakh shares in open interest. 45 rupees is the premium on 18,000 call. Tomorrow is the weekly options expiry. So we also look at what straddle writers are doing. A straddle is a call and a put together. So those who are writing 17,900 call, which seems to be the most active strike right now and also closest to where we are on the Nifty, the premium is 150 odd rupees. So what does this mean? That the option writers for tomorrow are playing for a range anywhere between 17,750 to around 18,050 on the way up for the Nifty. On the way up, however, if we do cross past that 18,000 mark, we may see some short covering because of the call writing that we saw yesterday. How far will that short covering go? The Nifty 20-day moving average is 18,159. And importantly, the Nifty Bank, which is leading the charge, has its 50-day moving average at 42,711, which could be an important resistance to watch out for.
Okay, 18,159 is the 20-day moving average and the 50-day at 18,307. a while away currently based on the levels that we see for the Nifty. Thanks, Mangalam, for that. Ashish Kyal of Wave Strategy joins in now to discuss the technicals and what he is looking at in terms of key opportunities in the market. Ashish, hi, welcome to the show. Well, there has been a recovery which we've seen in the mid-caps from the lows. We've seen the Bank Nifty also managing to hold up. But overall, what would your call be? Because it's been choppy in the past couple of days.
Yes, absolutely. If you look at the overall movement of the market, it has been a lot of volatility, but within a range. So even if it went sharply upside, we can see 18,100 levels were touched about 2-3 days back, and again it went sharply downside. And today itself is a very high volatile movement. We can clearly see Nifty touching the low of around 17,820, 830, bouncing back from there 17,980. So having said that, it looks like we are stuck in a range with a very high volatility. So this is essentially an option seller's market, right? Like Mangalam was also pointing out. What is important to also observe is that 18,000 call open interest has increased sharply, and 18,000 put we can clearly see unwinding is happening. So for Nifty to cross that 18,020, 18,030 is very essential. That can lead to short covering, and we can move up towards that 18,100, 120 level. So 17,980 to 18,000 is where I am keeping a watch if it can manage to cross that level or not. And on the downside, very important support where Nifty halted today is 17,830. So that's the broad range. And within this broad range, I'm more biased that there is a possibility of a breakout to come soon, maybe at a later part of the day. But the direction, I'm not going to bet on in which direction. So if it goes below 17,820, I'll be looking for short positions for a move towards 17,700 levels. Keeping 17,980 as the stop. So that's the range that I'm looking at right now on Nifty.
Okay, so that's the range that you're looking as far as the benchmark is concerned. Individual technical picks, Ashish, what would that be?
We can see some traction on the technology stocks. Sterlite Tech is the first peak after a lot of consolidation. There is a possibility this mid-cap stock can give a good breakout on the upside. It is some time. The volumes are huge enough. So looking like a good volume and breakout should now follow. So one can create long position in Sterlite Tech, keeping a stop loss of 166.60 for the target of 185. And the next stock on the buy side is going to be Timken India. Again, the stock has retraced nearly around 76% of its prior rise, and now showing a good morning star pattern reverse from there in today's session. Good volumes pick up. So we can again move back towards the level of 3325 on the upside. So Timken India, long positions can be created. Stop loss is going to be around 2,990 for the target of 3325.
All right, Ashish. Thanks a lot for joining in and giving us your views. With that, we'll simply a short break. On the other side, when we return, we will get you comments coming in from the management of Greaves Cotton. Our colleague Danish Anand spoke to him, and this on the sidelines of the Auto Expo 2023.
Welcome back. Well, it is turning out to be a day where stock-specific action continues to dominate. Just want to point out one particular stock. We were talking about Bharti Airtel on the back of a JPM note, but there is Cipla as well, which is reeling under pressure today. That stock is down around 2.5%. There was a note by Jefferies which spoke about a whole host of pharmaceutical companies, and they've downgraded Cipla from buy to hold with a target price of 1,100 rupees. So that's probably weighing on Cipla at this point. It is the second top loser on the Nifty this afternoon. But let's move on then. India's premier auto show, the Auto Expo 2023, is currently underway. Our colleague Parikshit is attending the expo and is joining in to tell us about what is taking place there. Parikshit, over to you.
Well, the big focus at the Auto Expo 2023 is clean mobility. Every company is showcasing their electric vehicle products in the hydrogen fuel space, the hybrid space, and the CNG space as well. Currently, I'm at the MG Motor Hall at the Auto Expo in Greater Noida, and this is the new MG Hector that has been launched. This was the vehicle that MG brought to India in 2019. It's got a facelift now, a diamond mesh grille, captain seats in the 6-seater version, bench seats in the 7-seater version, 78 connected car features, 11 ADAS features. So this is one of the showstoppers at the Auto Expo this time around. The new Hector comes at a starting price of 14,72,800. If I can ask my camera person to come with me, you've got two vehicles that MG is evaluating for the India market. One is an electric hybrid SUV, which can go from 0 to 100 in 6.9 seconds. And then you have an electric hatch, the MG 4 EV, which is already available in 20 global markets and comes with 5 different charging options. It's quite possible that one of these could be seen in the Indian market very soon. Moving on to other brands, Ashok Leyland showcasing at least 7 products. One, a Boss electric vehicle, commercial vehicle, which they would like to bring to the Indian market in the next fiscal. Maruti Suzuki making a big headline with the EVX, the electric vehicle that they would like to launch in India by FY25. The president of Suzuki Motor Company told the media just a short while back that they expect India to become a leading manufacturer of automobiles in the next few years. But the growth in FY23 could be impacted severely because of headwinds such as the war, the chip shortage, the interest rate hikes that are taking place across the world. They said they will continue to bet on small cars for the future. They see a strong room for small cars when it comes to the need of Indians for mobility. At the same time, they will not bet just on EVs. They will focus on hydrogen fuel cell, flex fuel vehicles, ethanol, CNG, and higher efficiency in petrol and diesel vehicles as well. So that was the commentary coming from the president of Suzuki Motor Corporation. We've seen launches from Hyundai. The Ioniq 5 has been launched as well. We're now waiting to see what Tata Motors has in store. We've been told that there will be some disruptive products that will be showcased. They're not launching any vehicle, but there will be several unveils across the electric vehicle, the passenger vehicle, and the commercial vehicle space as well. So do keep tuning in for updates on the Auto Expo.
Yes, we will, Parikshit, but just hang in there right now. I mean, we'd request you to take off your auto analyst, auto journalist hat, and just as a car lover, what excited you the most out there, and what is the launch that you're most looking forward to?
Well, I really was looking forward to the EVX, that is Maruti's electric vehicle, simply because we have been asking Maruti so many times over the years, haven't we, Mangalam, where is that SUV from Maruti, electric SUV from Maruti? So they showcased one today, and good to see that it was a large SUV that Maruti came up with. That will be interesting to see over the next few years. But I really liked the Hector as well, the EVs that have been showcased by MG Motors. So if anybody comes to the Auto Expo in Greater Noida, the MG stall is worth going to. Definitely Maruti, Toyota, Lexus. They have some great offerings, some beautiful vehicles to look at. I just went to the Toyota and Lexus stall, so they are definitely big crowd pullers. So let's see when some of those vehicles actually come to the Indian markets. But quite a few offerings here. But yes, a few disappointments as well. You didn't see the likes of Mahindra this time because they've already had their showcases, the big launches, the big unveils over the last 1 year or so. But quite a few SUVs, quite a few electric vehicles, hybrid vehicles.
Okay, so it's a fairyland for car lovers for sure, and you are enjoying that as well, Parikshit. Thanks a lot for joining us with all those details. So interesting times as far as the auto sector is concerned. Of course, different kind of vehicles, EVs, hydrogen fuel cell run vehicles as well is what we are seeing. So on that note, let's continue with this discussion. Greaves Cotton unveiled 6 new electric 2- and 3-wheelers, including the Ampere Primus. On the sidelines of Auto Expo 2023, my colleague Dani Shannon spoke to the MD of the company and who's the executive vice chairman of the company. Listen in to what he had to say.
Greaves, as you know, back in 2016 was one of the early movers into sustainable mobility because we believed when you look at oil prices, when you look at long-term sustainability, electric vehicles are the way to go. Hence, we started investing in technology, styling, centers of excellence, manufacturing, people. And today what you're seeing are 6 new products in the high-speed 2-wheeler and 3-wheeler, both B2B and B2C applications. And we have started taking bookings for the Primus, which is our first high-speed foray starting today, the Primus scooter. Thank you.
And so what about the pricing? What is the pricing strategy, and what do you think will make your company completely stand out in comparison to other players which have already moved in the EV segment?
So we were one of the earlier movers, and as you know, on the two-wheeler, we are one of the people where Magnus vehicle has been very well received, over 100,000 vehicles sold. In terms of, we believe we are one of the few people who offers an ecosystem play. What that means is we give a two-wheeler or a three-wheeler product. We also give financing, service, multi-brand service, multi-brand spares, and if you look at it, retails. We also sell other electric vehicles. So at the end of the day, when you look at the overall ecosystem of EV, we are one of the few players who plays in the overall ecosystem. That's what we believe should be a unique point, and our products are always competitively priced to the mass market. Thank you.
And so what about the charging infrastructure? What are your plans regarding the charging infrastructure? And do you plan to have both swappable battery as well as a plug-in system for your EVs?
Our systems will be ready for both charging, fast charging, as well as swapping. And we believe in India, B2B applications will probably demand a lot more swapping, whereas the B2C customer will need charging. Our vehicles are equipped to do both.
Right. So very lastly, what is the initial sales target that you have, and how much market share would you like to capture?
So as you know, our market share today is in the double digits, and our intent is these products should continue to keep us in the leadership frame with 6 new products designed in India, styled in India, made for the masses.
All right, that's Grapes Cotton up 3.5%. Before we head into a short break, here's something that you, our viewers, must take note of. CNBC-TV18 and the National Stock Exchange, we've come together to promote investor awareness through a special campaign called Informed Investors. It empowers you to make the right decisions with your money. Nothing in life is guaranteed, but many investors fall for the guaranteed returns gimmick. A smart investor always avoids investing in such schemes and is aware that they're illegal and must be reported to the exchange. Any investment in such schemes is not eligible for compensation from the exchange. Hence, it is wise to avoid investing with anyone promising guaranteed returns in the securities market.
Welcome back. Well, just a couple of stocks which are in focus on account of news is Sun Pharma. So that particular stock is in focus because the warning letter which was issued to the Halol facility has now become public. It has been uploaded on the US FDA site. So a couple of key important points with regards to this particular warning letter is that the company failed to establish and follow appropriate written procedures. They fail to perform operations within specifically defined areas of adequate size. They fail to use equipment to manufacture, process, package, hold appropriate drug products. And there have been concerns with regards to the cleaning, maintenance, sanitizing, sterilizing of equipment and utensils at appropriate intervals. Remember, that's important. Because those particular utensils are actually used to make different drug products, and hence sterilization, sanitization, etc. become very important. There is failure to thoroughly investigate any discrepancy or failure of a batch. The US FDA has pointed out there is an ineffective quality system and a CGMP consultant is recommended. So they've asked for a consultant from outside, a third party, to come and look at the operations that Sun Pharma has in the Halol facility. Now remember, it's already placed under import alert on the 7th of December 2022, and there was a warning letter which was issued on December 15th. So that's the one that we're talking about. But there is optimism from brokerages. They say Jefferies, for example, has said that it is one of their top picks for 2023. Sun Pharma's target price is 1,200 rupees. According to them, the larger places that domestic formulations and CRO CDMO have structural growth drivers. Few generic companies are investing in high entry barrier products. They like Sun Pharma for the same. IIFL has also upgraded the stock today. It is one of their top large cap picks of 2023. That's on Sun, but do watch out for a couple of other stocks such as GSK Biocon as well as Krishna Diagnostics. All three of those stocks are at fresh 52-week lows. We need to take a short break. But go ahead.
No, those stocks, of course, in focus today. So Pharma Pack, of course, is something that we are talking about today. But time for a break now. On the other side, Manisha Gupta joins in with Kunal Shah, Head of Commodities and Currency Research at Nirmal Bang Commodities. Stay tuned.
Welcome back. Well, there is some pressure which is emerging in the markets because the mid-cap index is now at the low point of the day. It's fallen around 0.4%. We have the bank Nifty, which has given up a lot of its gains from the top as well. So up around 0.3%. To put it into perspective, it was up around 0.6% when we did start the show. A lot of stocks under pressure in terms of the frontliners. So we have Bharti Airtel, which is now showing an accelerated loss of around 5% on the Nifty. A couple of the other stocks from the FMCG pack, such as HUL, Eicher Motors from the auto space, also under pressure. So it's really broad-based in terms of losses at this point. But over to Manisha. She has a guest with her this afternoon. Manisha.
Ekta, thank you so much for that. Joining me now on the show is Kunal Shah from Nirmal Bang. Kunal, hi. All that I want to talk about right now is gold, because we've seen strong gains, and contrary to what we saw last year where the dollar returns on gold were lower than rupee, this time it's quite different because gold until now is 1% up in Indian terms, but it's 3% up on COMEX. First of all, how do you read on that?
Because of the, we've seen a sharp appreciation in Indian USD INR pair. We've seen almost 2% of gain coming in, and that's one of the reasons why India is not able to move up in line with what is happening with COMEX. So international gold is moving up quite abruptly. So last year we've seen underperformance by the international gold, and domestic gold prices are up by 6-7%. But this year it is the opposite story right now. So far, international gold is doing well, and because of the rupee appreciation, we are not able to clock the same gains. And also, the domestic gold is being sold in the discount in physical market by almost $20-25. So this is why the gold prices on M6 are not able to catch up with the international trend.
Clearly that. And also when you look at the international gold prices run up, most of the reports now seem to be suggesting that the last 1 month or the last $40-50 of a jump up clearly comes in from the fact that China seems to be buying not just in the physical market, but the way Shanghai net longs have increased since 20th of December clearly are one of the reasons.
Yes, the Chinese demand continues to remain strong, and not just from the local investors, but also from the government. For the first time after a long time, we've seen Chinese central bank releasing the data that in the month of December, they've bought 70 tons of gold. So it is quite a surprise for the market because China was not releasing these numbers so far. So it's not just China, it's a lot of central banks, Turkey, Russia, China, all these central banks are buying gold. So what if tomorrow dollar declines quite sharply because of whatever is going on? So that's why central banks are, hedging themselves by buying gold right now. So gold is the best buy going forward, irrespective of the volatility which arises out of the monetary policy decisions or the inflation data, whatever. But the structural view on gold continue to remain optimistic, and I am of the view that whatever decline you see by 2-3%, it's a great buying opportunity. And I think 2023 gold really should outperform many asset class.
It clearly is outperforming silver for one to begin with and various other asset classes. I mean, as you mentioned, when you look at the equities markets internationally or the domestic equity markets, which are trading in the negative or just about flat, gold clearly seems to be trading in the positive in comparison to that. Kunal, another thing, when you do look at the jewelry sales, we've seen the last 1 month being quite dismal for the Indian market. So clearly on physical buying in India isn't so strong. Would you say that investment as a theme finally seems to be picking up?
Yes, silver, industrial and investment, both demand continue to remain strong because this year the expectation is that the demand of silver is going to move up in a double digit, more than 15% rise in demand expected in 2023. And the supply side in last 10 years, we have not seen any incremental growth in the supply. So majority of the silver, 50%, more than 50% of the silver comes from the secondary mine, lead and zinc. So we have not seen the supply catching up, and the demand side is getting stronger and stronger, and hence a lot of investors, even in India, we've seen silver ETF starting, and a lot of traction is coming into this kind of product. So investment demand for silver, because the fundamentals looks pretty strong, is also very robust right now. So strong industrial demand and strong investment demand is going to take silver to $28 in 2023.
$28. All right. It's trading at around $24 as of now. But Kunal, another question, and this is about the Indian investment demand when it comes to ETFs. And while we did see some redemptions in 2022, silver clearly saw some buying. What is the pattern that you see for this year? And would you advise as ETFs the way to go to when you look at gold and silver?
Yeah, it's definitely a good way to invest in because if you are going and buying silver in physical market, the discounts and sometimes premiums are pretty vague in different parts of the country. So if you buy ETF, all those costs is basically smoothen out. And I would recommend to go along if somebody is an investor. Silver in ETFs are a very good product to be in silver. So I would recommend to go along in silver ETFs.
Point taken. Thank you so much, Kunal, for joining us. So gold and silver both a buy, and if you were looking to invest, silver ETFs is a better way of looking at it. And gold also, as Kunal said, looks like this could be yet another year when gold could outperform various other asset classes. Well, with that, it's time to take a break. Coming up next after the break is Business Lunch with all the action forward.